8:34. Welcome in on a Friday morning. It is great to be here on KCMO Talk Radio as we roll through a busy morning. The jobs report came out last hour. It was 1 hour ago that it came out, and we were reacting to it in real time here on KCMO because guess what happened? The numbers came in above expectations, and nobody really expected that. The unemployment rate also ticked down from 3.9 to 3.7%. So let's welcome on our guy, Mark Falter. You hear him, Retirement Income Hour, Saturday and Sunday mornings at 9 o'clock. Mid-America Wealth Advisory Group here in town. Mark, your reaction when you saw the jobs report last hour?
Well, the jobs report obviously good. I still think the job market is moderate. I mean, it's not fantastic right now, but moderate. And, between now and Q2, I think still going to be a little bit weak. I mean, we got a lot to recover from.
Oh, yeah, we absolutely do. So, I mean, this report, I don't think anyone should view this report and do cartwheels and say, oh, the economy is doing great. I mean, that's clearly not the takeaway here.
And the thing we got to remember, too, that this inflation isn't, I mean, it is a United States problem. We have a way of feeling in the United States that we are the only humans on this planet. Man, it's way worse in the other areas, and that it's still a massive problem worldwide. And so this inflation thing is far but over.
Now, why does the worldwide problem, or how does the worldwide problem impact America? I mean, for the average person who's like, yeah, I don't really care because I'm getting squeezed here. Why should they care?
Well, give you an idea. They have a city in China literally called iPhone City, and that's where they put iPhones together. Matter of fact, that's what made the iPhones so darn hard to get during COVID. If you remember, that city was shut down. And it's like, oh, man, that's a problem. And so it's just costs of stuff. We're buying stuff in. I mean, that's one of the biggest complaints that the UAW has, or people have with Ford. They were in Chrysler and all that. They preach one thing and then they buy their stuff overseas. But point is, a lot of things come from outside the United States, and the inflation there is going to impact us here.
Mm-hmm. So, Mark, when you look at what happens now coming out of this report, the markets, it doesn't look like, are loving this news. Markets just opening up down. What do you think their reaction is going to be?
Well, the interest market has priced in many potential Fed cuts, and that's kind of what really ultimately we're looking at. That's the big thing we're looking for is a Fed cut. In the past 2 years, and it's been early almost every time. It's kind of because we want this thing kind of like we were when we were looking for a vaccine. We wanted it so bad, and we're wanting this interest rate cut. But I one thing I constantly say on my radio show is that if you're retired, if you don't owe money, you don't rush out there to get this done so quick. I mean, when's the last time you made over 5% on a CD? And so it's not as critical as for that group. I will say, though, if you're looking to buy a home right now, it's rough. I tell you what, Pete, I do not understand how $300,000 homes are selling. I don't. Well, they're starting to slow down, massively starting to slow down.
Well,
but I don't.
What do you mean you don't understand how they're selling or why they're selling?
Interest rates.
Yeah.
I mean, if you do a $250,000 mortgage and you run an 8-7% loan versus a 2.75% to 3.25% loan, shoot, it's $500 to $600 a month. I mean, that's a game changer for that group. I mean, we're seeing it happen. We're seeing companies that worked in that area of home prices are slowing down. The big ones are still selling, but that group's getting hammered.
But what it signals to me is that now people who used to be in the market for maybe a $450,000 home are now having to factor themselves or fit themselves into a $300,000 home, right? I mean, that's kind of what's happening.
Right,
so it's
right.
having this, and then the people who could have traditionally afforded a $300,000 home, they're now stuck renting. They can't find a home.
Yeah, and the rentals are going up. But I'll tell you what, I was reading an article here, just was looking at it 2 minutes ago, about how many more people in the higher home price are paying off their homes, which is great. Dave Ramsey's making a difference, man.
Yeah.
That's what he's been paying for last decade.
So you're saying that
home loan.
People in general are paying off their homes, or the higher end of the market?
Higher end of the market are paying off their homes, yeah. And there's just why am I paying this mortgage and just getting it accelerated quick, yeah.
Oh, okay.
I don't see a cut in these interest rates for a while. I don't see it through Q2 of 2024. If even, I'll be honest with you, I won't be utterly shocked if it doesn't even happen in 2024. but I can't speculate out that far. Ask me in August, but I don't see it happen in the first half of the year.
You don't see it. Okay. Now, could the back half of the year, where could the political climate, a presidential race, factor in to market cuts? You'd hate to think the Fed would ever, factor in politics. They never should. But you've been around the block long enough. Is it possible?
Yeah, and it's hard not to sound political here. I won't, but it's not so much of okay, so basically here's the deal. If Trump were in, he would have done things to not shut things down. If in Biden, he pretty much showed his hand right off the bat in shutting things down. Whether it's right or wrong, we don't need to get into it.
Wait, hold on. What do you mean? Trump shut it down too?
Well, he did, but with the oil and so forth like
that.
Oh,
you're talking about oil. Okay, yeah. I see what you're saying. Okay,
it's going to drive up your prices.
Yeah,
and when it drives up prices, it's going to affect inflation, and so it depends. It does depend on who we get as a president. It's going to matter a whole lot. And I would say if Biden gets reelected, we could hang on to our hats. We're going to be in this inflationary environment for a while. Yeah,
but you're right to point out that, hey, especially for retirees, they can make 5% right now in a money market with absolutely no risk. If you've made your money, if you're in that phase of retirement, you can read all the doom and gloom headlines, but I'll tell you what, it's a lot worse for folks like me right now on the younger end with 2 little kids than it is for somebody who is double my age in retirement, right?
Oh, yeah, and when you got little kids, I'll tell you where you've noticed it. You go through a drive-thru. I try to stay out of them, but if you go through a drive-thru, you cannot get out of a drive-thru for under $12. You just can't do it, and you didn't get that much. That was a $6 deal here just 2 years ago. It's amazing, and that's really the thing that's affecting that younger group, 100%.
Yeah. No, you're right. We try to avoid those drive-thrus, but once in a while, if we do it, I'm like, literally for a family of 4, I'm like, where did my $43 go? What did it go? It's insane. And you're talking about kids' meals in that as well.
I know. It's like we got nothing.
I know. It is. It's not a good scene. So, all right, when you look ahead then, Jerome Powell, you're saying you don't think anything happens the first half of the year. I was reading this Business Insider article that insisted, hey, we could have multiple cuts in 2024. Is that just wishful thinking?
Yes. If you want my honest opinion, yes. I think that here's the deal. Fed usually cuts, and when we have very weak job market, deflation, credit losses, defaults, et cetera, I think stock market will be down 20% before that happens. In other words, he's going to wait for if something bad happens in the market, he'll probably cut rates, but I think that I read through that article. I think it's very anticipatory. I think they're just tired. I think people are tired of these high interest rates, and they want to kind of tell them what they want to hear.
So then what are we seeing, with the S&P, let's say, over the last, heck, it's up 5% over the last month. It's up 7% the last 6 months. And really since it bottomed out in late October, it's up almost 10%.
Yeah, I think it's going to be very volatile through 2024. Very volatile. I'm not hoping for a 15-20% gain. I could be wrong. I could be wrong. But here's the thing. The Fed is, Jerome Powell said, things go well, I'm going to crank it up again. I don't think it's out of the complete woods that we couldn't see enough. It depends on how the economy goes. If we start seeing, I can assure you, if we start seeing inflation go back up, he will raise rates again.
He will.
He's serious about this.
Are you? What do you say to people though who are kicking themselves because they feel like they've missed out on this 6-7 week wild rally?
It depends on the age of the person. If they're 25, 30, don't worry about it. Just stay in. I've always said some of the best plans I've ever seen are 401ks where a person hasn't looked at it in 20 years and they bought a large cap growth fund.
Yeah.
And so those are some of the best. So if you're young, time offsets it. If you're retired, now is not a bad time at all to start looking at reallocating to safety, because safety is it used to be safe. Now it's safe and pays a good yield. And I would argue the fact that over the next 6 to 8 months, it might actually outpace the market if you get in the right safe account. Now's a great time for those people to start reallocating, take money off the table.
Well said. Mark Falter, Retirement Income Hour, Saturday and Sunday mornings at 9 here on KCMO, Mid-America Wealth Advisory Group in town. Mark, it is always good to get your insight and perspective on a busy day with these jobs reports. So we appreciate you coming on the show.
Hey, thanks again, man.